There we go, and we're live. Good evening, everyone. As per usual, we'll give everyone just a couple of seconds to tune in, get seated, hopefully have a snack or some hydration nearby. Welcome from me. If you haven't met me before, my name is Willem van der Post. I'm the chairman of Simple Capital, here to facilitate tonight's conversation with Kaivan and the Asaak opportunity. Also joining us is Blake Musgrove, who I'm going to introduce in a second. But just while we wait for the last couple of moments for everyone to join, I'll ask that we bring up a QR code. The trouble that we find with digital conversations is that most of them are one way and it becomes a boring soliloquy. As a consequence, we like to establish a two-way infrastructure. And so on screen right now is a QR code over which you can hover your smart device camera. That will immediately open up a WhatsApp group where we have both some Simple Capital team members as well as Asaak team members. And the idea is that as you're watching this live, you might be able to engage in some real-time conversation. And if you're not watching this live, we're going to occupy that channel for a period of 10 to 14 days subsequent to this intervention to enable you specifically to follow up on some questions. We often have found that initially during an expose, an investor might only think of something subsequent to that expose, and then we don't want to have that opportunity lost for questions. So, ladies and gents, please do use this infrastructure. It will be open for the next 10 to 14 days as we are trying to close the round. And so with that said, I think everyone's got comfort now, found their sitting positions, got the snacks ready, maybe set the volume on an appropriate level. And so without any further delay, let me introduce tonight, first of all, CIO of Simple Capital, Blake Musgrove, dialing in from, I believe, if you listen carefully when he talks, you'll hear the ocean in the background on the east coast of Africa. Blake, is that right?
Yeah, close enough, Willem, close enough. Hi, everyone. Excited for this webinar.
There we go. Blake, thank you very much as usual. And then Kaivan, I'm not entirely sure where you sit tonight. You are the founder and the team leader at Asaak. Tell us a little bit about where you're dialing in from.
Hey, Willem, thanks so much for having me on today. So I happen to be in New Jersey today where my parents live, but next week I'll be in Mexico and who knows after that. So yeah, whirlwind life of a CEO.
Okay, always full of adventure and never a dull moment. Hope you're collecting those traveler miles. Ladies and gents, if you're used to the Simple Capital way of doing things, you'll know that there are some regulatory requirements that we have to just briefly jog through in order to make this whole thing compliant and hold water. Can I ask Blake on behalf of Asaak just to quickly jog us through the highlights of this disclosure piece?
Hi, just checking. Everyone can hear me?
We've got you loud and clear. Thank you, sir.
Great. So just covering on regulations. So this disclaimer and disclosure. So please note that this is a closed loop offering, not available to the public. This should not be construed as advice in any way. We encourage investors to seek their own independent advice and do their own due diligence. Please note that all early stage investments do carry risk, and just pointing out that Simple Capital Partners Limited is an authorized financial service provider. Thanks, Willem.
Blake, thanks so much. And then as we just go through the formalities, we have, as we had mentioned, Kaivan Sattar from New Jersey, myself from Simple Capital facilitating tonight's proceedings, and Blake Musgrove, our CIO at Simple Capital, who will then also talk us through some of the deal structure when we get to the technicalities of how the vehicle of investment works. If we move on, there is one more compliance piece to jog through. I want to just put your mind at ease. The process to get your certification and KYC equivalent documentation done is procedural. And our partners in the infrastructure provision have been set up appropriately to take you through this minimum investor requirement self-certification. So we wanted to formally put it on screen, but we're not going to spend a lot of time on it today. I wanted to get us into the meat of today's conversation without any delay. And so, Kaivan, let's start immediately with you. Talk to us about what problem Asaak is solving. Oh, we might have had an audio out there. Kaivan, can you still hear me? If you could just give me a visual thumbs up or thumbs down. There we go.
Hey, yes.
Fantastic. Let's hand over to you to talk about the problem that Asaak is solving.
Okay, great. Yeah, so for the problem that Asaak is solving, the huge challenge we see in emerging markets is that there are so many millions or hundreds of millions of entrepreneurs who would love to multiply their income if they had access to productive asset financing, which is very hard to get. So, a very stark example here is that only 2% of African households own a vehicle today, while the other 98% would really love to if affordable financing existed. And we see similarly huge and untapped opportunities in Latin America as well. And so, our initial product was motorcycle financing for taxi drivers in Uganda. And as a direct result of our product, we're able to double the income of every single driver that we work with.
All right. So, in terms of solving this problem, though, how are you going about this?
Yeah. So there are a number of other brick and mortar asset financiers out there, but they're plagued by a number of challenges. So they have extremely long turnaround times of up to 6 weeks. They can be extremely expensive, and they're not always transparent in their requirements. And so we were the first fintech to enter the motorcycle financing space in Africa. And through a streamlined fintech lending platform that we built ourselves from scratch, we're able to process a loan in just 3 or 4 hours, whereas the industry average turnaround time for the same product is 30 days.
That's amazing. That's a lot faster than industry benchmark. I'm anticipating interesting news in terms of how you get that right. So talk to us about the solution.
Sure. So the way that we're able to process our loans so quickly is through the fintech platform that we built ourselves. So we're actually able to plug into different ride-hailing apps like Uber, Bolt, Jumia, where we are able to crunch data on their drivers, like how many trips have they done in the past month, what are their passenger ratings, and then we can instantly approve them for a vehicle loan on that basis. So currently we're operating in Uganda, where our main vehicle that we finance is motorcycles. We are also live in Mexico through the recent acquisition of FlexHelp Mexico, which we'll talk a bit about later. And so based on the ride-hailing app data that we get from our partners, we can quickly approve someone for a vehicle loan. And this is the beginning of our relationship with the driver. And we always encourage them to build a strong credit profile with us so that they can subsequently access other products that they really need, like a fuel loan or a smartphone loan or a personal loan. And so the vehicle loan that we lead with, it's a highly secured product because we own the collateral, it's GPS tracked, it's insured. So we have seen very low default rates on the initial vehicle loan. And then by encouraging the driver to build a strong credit profile with us over time, we have a way to retain him for the long term. So even after the vehicle loan is repaid, they can still keep benefiting from our other products like smartphone loans and personal loans. And from these secondary products, we're actually able to double our revenue per customer compared to what our competitors do.
Okay. So I'm hearing a lot of language that investors would understand in terms of credit, in terms of vehicle loan. Talk us through a case study. I mean, let's do a walkthrough in the journey of your business model, please.
Sure. So to better understand our product, we can actually take a case study of John Bosco, who was our very first motorcycle loan customer back in July of 2019. So in East Africa, these motorcycle taxis are extremely common. They're known as bodas. And so before John Bosco came to us, he used to rent a motorcycle that he would use for his job, and he would pay huge amounts of rent in order to do so. So he was spending around 50% of his weekly income to rent the motorcycle, and yet he had no hope of ever owning the asset itself because he didn't have documented income, he didn't have formal credit history, or the other normal requirements that any bank in Uganda would ask for. So instead, John came to us with his SafeBoda app history, and we saw that he was actually making enough income to support the loan, and that he could afford our product. And so we gave him his first ever motorcycle loan. And today, John has actually paid off his first bike. He's now financing a second bike. And the vision that these drivers have is often to build up a fleet of bikes over time so that they can always be riding the new one themselves, and then they rent out the paid off ones to their friends and relatives so that they can have multiple incomes and quickly graduate to the middle class.
Kaivan, is this a real case study? I mean, this is not a fictional character just to illustrate your business model. This John Bosco is real.
Yeah, he's very real, and a very interesting story about him. So John actually has a bachelor's degree in math, like myself, and he used to be a secondary school math teacher, but he left that job because he was making more money by driving a motorcycle. But when you first break into the industry, most drivers are forced to rent a bike to begin with, and so they're not always able to save that much money for the future. And so after we gave him his first motorcycle loan, he was able to double his income.
So, I mean, immediate reaction from a investor is, well, it sounds like you're playing in a very risky part of the lending book range, in that if banks won't necessarily work with an individual that you're busy funding. So we're going to get some questions tonight about how you manage that credit profile and manage the risk of default specifically. But before we get there, you mentioned a couple of times Mexico. Talk to us a little bit about this Mexico acquisition that's occurred, and for the investors that don't know about it yet.
Sure. Yeah, very happy to talk about our Mexico acquisition, which was actually facilitated by simple.Capital. So in April, I got a WhatsApp message from Blake around 11 p.m. saying, "Hey, Kaivan, are you free tomorrow morning for a very strategic meeting?" And I'm like, Blake, it's 11 p.m. But sure, we can chat. Let's see what's up. And so we had the privilege to consider this very unique opportunity to acquire a very similar business in Mexico. And we had actually been on the hunt throughout different parts of East Africa to see where Asaak can expand after Uganda. But when we got to know this company, Flex Club, we saw that they were doing the exact same thing as us, of giving vehicle loans to Uber drivers based on their app data, in a very different geography. And just given everything that's happening in the world in terms of the macro environment, we felt that it was strategic to actually get a fair amount of geographic diversification by going to an economy that was quite uncorrelated with Africa. So, I mean, we remain committed to further expansion within Africa, but probably for the next 6 to 12 months, we'll have our hands full building the Mexican business, and as well as scoping out other opportunities in Latin America. And yeah, I mean, we saw this as the fastest way to expand internationally by simply acquiring the business operations of someone who had been doing our exact same type of product. And we also felt the ability to really make an impact because of our tech and because of our success in raising debt. So why the Flex Club company had to be sold off was basically that the founding team wanted to take the company in a different direction of doing more of a white labeled software as a service product, and they were pivoting away from asset financing. But we love asset financing. It's our bread and butter. And so we felt that we would be able to make the Flex Club Mexico business profitable just in a matter of months, because we have automated much more of the lending process than they previously had the time to do. And also, we have had the fortune of being able to raise $25 million of credit facilities from different funds like Chorus Finance, OnTap Global, and Standard Bank. And our debt funds are excited by this acquisition of a Mexico company, and we would be able to carry over our existing debt facilities there.
Kaivan, that's super exciting because ordinarily we only see acquisitions much later in a company's life cycle. And so we're going to talk about traction in a second. And I think we're going to see this Mexico acquisition spike in your revenue. So let's go to the next slide and bring that up. But before we necessarily just talk about that last little tail end that just kicks up, the traction that you've built up to now has also been monumental. I mean, this is a great set of growth traction stats. Talk us through it.
Yeah, no, we are quite happy to actually have started in Uganda, which some investors have overlooked for some years, thinking that it's not as big of a market as Kenya or Nigeria or Egypt. But for us, it was an extremely good place to start the business because we didn't have as many competitors as we would have had if we had started from Kenya or Nigeria, for example. So, in 2022, when we saw how the VC slowdown was affecting different African startups, we made the decision to become very efficient with the capital we had already raised. And we are quite fortunate to have just closed our second profitable quarter in a row. And, with that traction under our belt, we started thinking about doing international expansion. And as we looked more and more closely at the Flex Club opportunity, we realized that this is the fastest and cheapest way to launch in another country. And because of the current distressed fundraising environment, we're hopeful that more such opportunities will present themselves in the future. And what we're developing is a playbook where we have built all of the tech that an asset lender would need to operate in any emerging market. So, as more such opportunities to acquire distressed vehicle lenders come up in different countries, we would have the ability to go in and to further automate some of the manual processes that these companies were doing before they met us. Then we copy and paste our existing $25 million credit facilities to be able to scale up the loan portfolios in the new country.
Okay, so a couple of questions just that comes off of this slide. First is that are you only in Mexico and Uganda right now, or does this graph represent some milestones where you've entered into other jurisdictions already? Just help the investors orientate around your geographical presence relative to this revenue traction that we're seeing on screen.
Yeah, for sure. So yes, we're only operating in Uganda and Mexico right now. In Uganda, we have coverage of the whole country with 8 different branches around Uganda, and then in Mexico, we are present in Guadalajara in central Mexico. So for the next 6 to 12 months, we'll have our hands pretty full to building up and scaling the Mexico business. While still being committed to African expansion. So our strategy for Uganda for this year is to go deeper into rural parts of the country. So we have seen very strong loan performance actually outside of cities. And so our strategy is to target farmers with our motorcycle loans, because we find that they're able to use the motorcycles both for agriculture, like carrying their crops to the market after the harvest, and then they also do boda business with it as well. And so because they're getting 2 types of income from the bike, they're better able to support the loan repayments. And also we have seen that the farther somebody is from town, then the more sparse credit access is there, and so they actually treasure these assets much more because they feel that it was not easy to get this bike in the first place, and I should really cherish it and pay back my loan well.
Fantastic. Okay, that immediately brings up a question for me, which is this business model something that lives only in the Ugandan environment by virtue of some of the local market nuances or niches? Or is this transposable into some of these other jurisdictions? Because I hear you in the one end saying you're building with a view to expand into other territories. And I just want to give users some comfort as to whether or not this model is transposable into some of these other geographies. Obviously, Mexico works for you, but what about others?
Yeah, for sure. I mean, we have seen similar challenges across many emerging markets. One thing that I've always found interesting about Mexico is that they are a middle income country. You know, the average income per year being around $15,000 or $20,000. You know, far greater than what we see in Uganda. However, even in Mexico, people still borrow at 300% interest per year, meaning that the credit markets are broken, they are overpricing risk, and because of that, the vehicle ownership rates it still remains pretty low. And you know, as we look at other parts of the African continent, like in Congo and Tanzania, and other parts of Latin America as well, like Colombia and Brazil, I mean, everywhere we're seeing that the traditional brick and mortar lenders they fear the gig economy space. You know, they very much like to cling to their old business models of asking for land titles and 3 months of bank statements and audited financials, which you know how many individual entrepreneurs have these long set of requirements, right? And so the banks are really missing out on the opportunity in Africa in particular. Even the biggest banks that we have on the continent, they're only serving 5% of the population. And so if you ask most business owners in Africa or Latin America, what do they need to grow their business today? More than 90% of them would say credit. And over time, you know, we as at Asaak have also learned the best and most responsible ways of delivering that credit. So in the past, we used to give cash loans to businesses, but we found that, you know, sometimes the money would get used on rent or paying school fees or buying food or, you know, other household needs. And so we learned through experimentation that the most responsible way of delivering this credit is to give it in the form of productive assets which can multiply the borrower's income. And this is a common need that we have seen come up time and time again in almost every region of the world.
Wow. Okay, that's fantastic news in terms of a prospect around the ability to grow and to further expand your business, which already is showing signs of profitability, which is also a little bit unusual for such an early stage company. How is it that you're already profitable? Is it these big credit inefficient market margins that you're capitalizing on?
Yeah, thank you, Willem. We are quite proud to have become profitable in a very difficult macro environment. And we haven't even raised our Series A yet. And we have had the fortune of becoming profitable and also doing an international M&A transaction. So, you know, the way we managed this was by pulling a few different levers. So first, the enormous amount of tech and software development that we've done over the years has helped us to automate much more of the lending process than any of the brick and mortar players in this space. And secondly, last year we made a big push on bringing in-house certain workflows that we used to outsource to others. So we used to outsource GPS tracking and even insurance for the vehicles, and outsourcing those in the early stages of the product helped us to grow faster and to gain market share. But then by studying, you know, how our external partners did those workflows over the years, we found that we could actually do it more cost effectively ourselves by centralizing some of those operations. So by bringing the GPS tracking and the insurance in-house, as well as by continuing to automate more and more of the lending process, that's how we were able to have our second profitable quarter in a row.
Well, I must commend you. That's not often that we have the privilege of talking to an early stage company that has achieved so many feats and is already starting to gobble up some of the other links in the value chain within which they operate. Really, that's fantastic. I want to immediately use that also to go to our next slide, because you've used the word we many times. I'm sensitive to it because we often find CEOs that's I, me. You haven't done that. So who's the we? Who's making the magic in your team? Talk to us a little bit about your team profile.
Yeah, for sure. You know, our founding team has been slogging away at this for the past 7 years, and I'm very fortunate to have met my different colleagues from different walks of life. And our experiences range from fintech to software engineering to traditional microfinance, and this is the very team that will carry Asaak all the way to IPO. You know, very very blessed to have a team that will stick by the mission and the vision of company, throughout many ups and downs of the businesses. There were times when we had to heavily reduce pay, but I'm so grateful to have a team who did not lose morale in spite of that, and because of their persistence and dedication, we were able to grow the company to where it is today.
That's fantastic. At some point, and I hope people ask it in the WhatsApp group, in the two-way conversation infrastructure that we've built to be able to facilitate those conversations, where you've met some of these people. In my experience, the team is probably one of the most important aspects of a business. And so hopefully we've got some Q&A time at the end there. We can talk a little bit about how the serendipity worked to meet some of these team members. For now, though, let's keep it to the financial metrics and perhaps just switch gears and talk a little bit about size of the market and competitors. We've heard you talk about growth prospects. We've seen your ability to get profitable. You've acquired someone already in Mexico, so you're now operating in 2 territories. You yourself are sitting in the US to be close to the capital markets. When you get these capital market questions about the addressable market size, how do you answer that? Talk us as investors through that aspect of your business. Who's fighting you in that space, and how big is that space?
Yeah, for sure. So I would say 105 billion is a very conservative market size. When we start adding in the market sizes for our secondary products like fuel and smartphones and personal loans, it actually balloons quite a bit beyond 105 billion. So what I've only included here is the market sizes for car and motorcycle loans in sub-Saharan Africa and Latin America as well. I mean, it's really hard to overstate the size of this opportunity. Just going back to this incredible, powerful stat of only 2% of Africans own vehicles today, and the other 98% would really love to if affordable financing existed. So, I mean, our work is definitely cut out for us. Like even if we had a $10 billion line of credit, which of course hardly anyone does, we could deploy all of that in a year through the different systems that we have built and just seeing the level of demand that's in the market. I mean, in so many countries, you can go to a top university, you can have a technical degree, but there's no guarantee of an office job. So what most young people realize is that they have to employ themselves. And the most easily accessible job that people can get in many nations is to start driving a vehicle of some sort and ferrying passengers. But then people quickly hit a ceiling on the income that they can earn when they don't actually own the underlying asset. So this is the huge opportunity that we're seeing, is to help small entrepreneurs grow through credit, but by channeling it into highly productive assets, which are guaranteed to generate cash flows from day one.
Why are the banks not reacting to this? I mean, if you say 2% of Africans have vehicles, the size of the market is so massive. Banks already have footprint and they've got balance sheets. So why are they not just being more nimble in some of the approaches to service this segment of the market? It seems like there's a sleeping tiger in the room, and when it wakes up, it might come and eat what you're busy doing. So why are banks not doing this? What's precluding them?
Yeah, but very, very fair question. So I can give an example of our the exclusive partnership that we have with Standard Bank. So we have been very fortunate to work with them over the past couple of years, growing our loan book in Uganda. And so for Standard Bank, instead of them doing all of the work of coming up with a motorcycle loan product from scratch and figuring out how to underwrite a customer who doesn't have a bank account, it's much easier for Standard Bank to simply give us debt capital, which then we allocate to Boda drivers as we see fit. So this is a very easy way for them to get exposure to the unbanked class without having to completely overhaul their different rules, right? Like if you go to any traditional African bank, they're going to ask for bank statements, number one, as the first requirement. Then they might want security over and above the motorcycle or vehicle that they're financing, and then they might want audited financials and other things. So it makes much more sense for Standard Bank to do that level of due diligence on Asaak as a company, and they just give us debt capital, and then we manage all of the intricacies of working with tens of thousands of Boda drivers in Uganda or car drivers in Mexico.
Actually, so I mean that's such a powerful statement, because if Standard Bank don't want a direct exposure, but they don't want to lose out in the market, and they're using Asaak to get to that market, then Africa is your oyster, because Standard Bank is probably one of the largest bank, if not the largest bank in all of Africa, with presence in all those markets. To have them as a strategic partner is, I mean, that's a dream come true for an entrepreneur.
Oh, totally. And no, we have been very privileged to work with them, and our relationship and partnership, it extends beyond credit, in fact. So they're already funding our loan book in Uganda, and we have also started to pilot savings accounts with them. So we're very proud of this, in fact, because historically, Boda drivers have never cared about having a savings account, and probably less than 1% of them have one today. However, what shifted their thinking was COVID. So when we had the first COVID lockdown, all public transportation in Uganda was banned. And so for the first time, Boda drivers were stuck at home. And they started reaching out to us and asking Asaak for help, that can you help us to form a savings group, because we're now stuck at home without income, and they were buying into the idea of savings. But it's still hard to convince them on a traditional savings account, where like you have to go to their branch, fill out paperwork, pay monthly maintenance fees. So through the partnership that we have with Standard Bank, we're able to offer a mobile savings wallet, which is much more tailored to the needs of Boda drivers who do not have the time to go and wait in the queue at the bank for hours just to do a simple thing like opening an account. So through the savings wallet, it's totally integrated across mobile money as well as banking networks, and it doesn't require physical presence of the driver at any time in one of the branches. So we are very happy that we've been able to bring several hundred drivers onto the formal financial grid, and convince them to have savings accounts for the first time, which will put them on a path to better financial wellness, as well as to secure our credit risks as well.
Okay, that makes total sense. You've lined up how to access the market. You've been able to figure out how to do it profitably. You've got very big partners that are providing you with the capital to deploy. Who are your competitors? Said the market's pretty big. It must have alerted some other people to try the same thing. Who are they?
Yeah, for sure. So there are some traditional banks in Uganda who have tried to do Boda lending in the past, and there are more recent companies that have entered the space too. But the common challenge that many of them face is that they have brick and mortar approaches. So they still insist on giving paper applications to the clients. They have turnaround times of 30 days or longer, because the traditional way to vet a motorcycle taxi driver is to do 3 or 4 field visits. So what some of our competitors do is they'll visit the Boda driver's home, and then they'll visit the driver's workplace, and then they'll also visit the homes of 2 guarantors. Now, what we have seen over time is that if we have a GPS tracker in the bike, we can already know where you stay. So there's no point of us physically going to replicate that same due diligence, especially when we have the ability to remotely disable the bike if the driver has willfully defaulted. So we much prefer our style of data-driven underwriting and loan enforcement, which we have seen is not only faster and cheaper than the kind of physical due diligence that our competitors do, but it's also more effective. We have the lowest default rate in our industry of just 2.5% on an outstanding loan portfolio of $15 million.
I was going to ask about default rates a little bit later, so let me put a pin in that and come back. Just because we're on the technology trajectory here, this is not something that you've bought over the counter and customized a little bit, such as to be able to call your own. Talk to us about the tech, because it's yours and you built it, right?
Yeah, absolutely. So when we launched Asaak in 2016, we were actually the first company in Uganda to issue a loan through mobile money. And so when we tried to see if any off the shelf solutions could work for us, they simply didn't exist because there weren't core banking systems at that time, which were integrated with mobile money. And the other unique challenge of our customers is that many of them are actually not literate, and they don't always have smartphones. Yet they are very good at repaying their loans. They're good credit risks, and they can use mobile money even from a future phone. So our tech team loves the challenge of building product for an audience who doesn't always have internet access and who's not always literate. So, some ways that this has manifested itself into our product. We're currently building the world's first Luganda language chatbot, where our customers in Kampala and the central region of Uganda should be able to talk into their phone without typing in their own local language, and then we should be able to respond to them in kind with information about their account balances or upcoming payments, or guide them through the application process for our other products. So I would say that is a unique feature of the market that we work in, where clients aren't always that tech savvy, but they truly believe in repaying their loans.
Okay. All right. So proprietary technology, it sits inside of your company. And so investors will be interested in that because it's not just obviously the income statement that makes sense and works for us here. It's also the fact that there is an IP asset that's being built and that will grow. To that growth, I think roadmap is something that every investor at some point asks. So just talk to us a little bit about your view of roadmap now that we understand how your model works and the technology.
Yeah, for sure. So the way that we think of our own product roadmap, it correlates with the needs of our customers. So as I was mentioning before, most business owners in Africa and Latin America today, if you ask them what do they need to grow their income and bring their business to the next level, it's credit. So we lead with the motorcycle loan or the car loan first. Then after we've solved their immediate challenge and now they're earning much more income than they used to in the past, then they would start thinking about medium and long-term concerns like where can I have a safe place to store my extra cash, right? How can Asaak develop a good saving solution for that? Then some of the other medium-term projects we have are to develop our own smart vehicle insurance as well, because something we realized is that we actually have much more data at our disposal than the insurance companies who sell us motorcycle and car insurance. The insurance companies who come up with these products, they have certain assumptions about the riskiness of motorcycles or cars in different geographies, but they don't actually have tens of thousands of vehicles that are on the road that are generating GPS data in real time the way that we have access to. So we can actually price the risk of these accidents much more efficiently than others can. So we're starting with credit today. This is the most critical unmet need of most Africans and Latin Americans. But then in the future, they'll be needing these other financial products, which we're starting to pilot already.
Oh, that's an amazing prospect to think of. Okay, I'm glad also that you're saying that's a future endeavor and that you want to bed down the current capability first, because I think what we've often seen is entrepreneurs that touch at a niche piece of the market, get excited about some of the adjacencies, and then end up with a diluted focus, chasing two birds and then catching none. So I really like the discipline that you're illustrating by virtue of how you're planning and articulating your evolution of company, which brings me to growth and distribution. Now, we've already mentioned the likes of the banks that have used you almost as an access channel into some of the segments where they have footprint, but not yet necessarily traction themselves. Standard Bank's not the only one. Who are some of your other partners? And then in the same breath, also just talk us through some of your distribution strategy, because to have the capability and the capital is one thing, but you still need to find the people to deploy that capital to. And how is that happening? Can you package that up for us a little bit, please?
Yeah, for sure. So we think of our market in terms of the online and tech savvy customers who they're part of different ride hailing apps like Uber, Bolt, and Jumia. They're literate and they have internet access. So we have streamlined ways of working with them through the different data partnerships that we have built with these ride hailing apps over time. So for example, when we transact with Uber drivers in Mexico, we're actually paid a commission by Uber itself for every vehicle that we sell to one of their drivers. Now, why they do that is they realize that their own drivers are much more engaged with the platform when they're also receiving financing through the platform. Now Uber itself is not in a position to actually originate and disperse the car loans themselves. They much prefer to outsource it to other parties like us. And so it's a huge boon in our business model to be able to get paid by Uber for selling the car to the driver, as well as to collect the interest from that driver over the next 3 to 5 years. And so in this way, we're able to work in a very streamlined fashion with the app drivers to instantly approve them for credit. However, also, as I was mentioning before, not all drivers have smartphones. They're not always with internet access or able to read and write in English. So we have ways of working with the offline customers as well. So in Uganda, we work with savings groups for Boda drivers, with different Boda industry associations and labor unions. So in this way, we don't have to struggle with pitching clients one by one or using a B2C approach. We think of it more as a B2B2C, where we get big partnerships with different apps or traditional industry groups, and then every partnership that we strike up with someone gets us access to hundreds or thousands of drivers.
Much more chunky money and much more chunky user accrual. Like you say, because you're not doing the individual one by ones, hoping through digital channels to get traction. You're using partnership distribution. That's smart. We like that. Okay, so now you're raising, Kaivan, precursor to your Series A. What's the story? Why?
Yeah, for sure. So we are raising a small round right now, $1 million on Safe Notes to help accelerate expansion in both Uganda and Mexico. So this will basically be used to unlock more debt capital from the different funds we have onboarded already. So we work with different debt funds like Chorus Finance and Untap Global, who do require us to maintain certain debt to equity ratios so that we don't become over leveraged. So the primary use of this capital would be to help us grow the loan portfolio in both countries. In particular, we want to make the new Mexican business profitable within the next 6 weeks or so, before we go out for a larger Series A raise. For investors joining this opportunity, I would say it's quite a unique story because it is historically unprecedented in global fintech for a Ugandan company to expand to Latin America for their second market, and especially to do so by the acquisition of a company in a different locale. So we're quite proud of this achievement, and it shows the ability of East African startups to scale to much larger markets, and we are still committed to expanding within the continent as well. So probably around Q2, Q3 of next year, after we've concluded the larger 5 million Series A raise, we would start opening up new markets like Congo and Tanzania.
Okay, so what we're looking at here really is it's a precursor round. It's almost like it's bridging until you have the $5 million round. I'm going to give you an opportunity, Kaivan, to have some water. Just to take a breath. This has been a fascinating whirlwind of a journey that you've taken us on. Thank you for taking time out of your business to do this expose. We're going to circle back to you in a short while with some questions, both from the group and some that I've written down as we've gone along, to perhaps just put a cap on the opportunity here. We've just welcoming back Blake Musgrove, CIO, simple.Capital. Blake, can I ask you just to talk us through the investment overview? We've heard the background and the canvas against which this investment is made from the founder himself. Now let's talk about some of the instrument workings and how this particular investment plays out.
Sure. Thanks, Willem. So Asaak is domiciled in Delaware in the US with operating companies in Uganda and Mexico. We're, as Kaivan's just mentioned, looking to raise in the region of $1 million to unlock debt capital ahead of the Series A. And so there are a number of different opportunities to invest with different terms that have been stratified by size of investment. So really democratizing access to this opportunity from as low as $1,000 on the left-hand side, the safe note at a $50 million pre-money valuation cap. And this will be via an SPV, a Carter SPV, which we'll touch on the next slide. For those investors that can put in a check north of $200,000, there will be, in addition to the cap, a 20% discount on the Series A valuation. So big value accretion over a short period of time, which gives you some nice IRR uplift on your safe note upon conversion with that discount. For investors with a bigger check size, around $1 million, I think this would be a bespoke deal. And there's terms to be negotiated, and direct equity opportunity on the Asaak cap table is available. Touching on the structure here, so as Kaivan had mentioned, there is an existing Carter SPV already set up. For those simple capital investors on the call with exposure to Asaak, you'll note that this is not a simple capital structure. This is a SPV domiciled in Delaware. Carter is a leading infrastructure provider, or the leading globally. This has already been set up. It's already accepted investors for as low as $1,000. Essentially, as investors, you would have a participatory interest in this SPV, and the SPV would then sign the safe note with Asaak. So essentially, the economic interest in the safe note will be held within the SPV, and as investors, you have a participatory, a beneficial interest in that SPV. There's no additional costs to investors. Simple Capital is an investor in Asaak already. We are also assisting from an advisory perspective. So there is a success fee of 3% to Simple Capital for Simple Capital introduced investors, but no additional costs on an ongoing annual basis or carried interest in this SPV structure. Costs assumed by the company. Willem, back over to you.
Blake, just a question that pops up here on my screen is safe notes sometimes have conversion dates or conversion date windows. Does this safe note also have a conversion date or an intended date?
So this is a Carter drafted language of the safe note. There is no forced conversion dates in the safe note documentation. However, to give investors comfort, as Kaivan mentioned, as of the 12th of September, the Series A raise will be kicking off. So it's an opportunity to enter at smaller size and potentially at a discount to the Series A, which is kicking off imminently. So that can give investors comfort that you won't just be sitting with an open-ended safe note that never converts into equity.
And the proceeds of the safe is used to fund capital expansion on an existing book, which we'll talk about in a little bit as we perhaps just unwind some of that as well. Blake, thank you very much, making lightweight of the heavy lifting as per usual. Gentlemen, would you care to take us just through the Asaak highlights? We've heard a lot tonight. We're cognizant of only having about 10 minutes left. Can I ask that we take a step back, zoom out, and perhaps just jog through the key highlights of the expose tonight?
Sure. Yeah. So we are quite proud to have gotten some significant traction even before raising our Series A. To have done our first international expansion, our first acquisition, and we have proven that despite a very difficult macro environment, we are able to become profitable and still do multi-continental expansion. So we're actually thinking that this can be a playbook for future growth. For the next couple of quarters, we'll definitely have our hands full growing the existing Mexican business. but this can actually be a playbook for acquiring other distressed vehicle lenders in the future, coming in with our superior tech and to automate some of their manual back-end processes, and then transplanting the existing debt facilities that we already have, which can already be used across multiple countries, and making them profitable very quickly. So, despite all the turmoil that we saw in capital markets last year, we tripled our revenue and grew profit margin by 82%. And now earning more than $5 million revenue run rate, and it's only the tip of the iceberg. So I think the best is yet to come for Asaak, and would be honored to have you join us on this journey.
What a fantastic story. Okay, in terms of the highlights, thanks for sharing them, gents, and just highlighting. I've got two additional questions that have popped up here. The first relates to electric vehicles, and the second relates to the credit process and perhaps some of the perceived risks that investors just want to get a little bit more comfort around, given that we've covered a little bit about the banks play in this space, but it might be worthwhile to unveil a little bit about the credit process. First, let's deal with EVs, a hot topic. Our countryman Elon Musk is a big proponent, came out in the press yesterday saying the world is going to run into electricity deficiencies if everyone converts to EV. EV also a very interesting market space where the second-hand price of EVs is not perhaps fully mature in the emerging or frontier economies, given the advances made in battery life, some of which we saw last week actually with Toyota. So your views on EV, both scooter as well as automobile, is this something that the Asaak should be thinking about? And have you thought about it? What is your thinking around it?
Yeah, for sure. Thank you, Willem. So we are involved in this space already. Actually, when we acquired Flex Hub, they had an active portfolio of electric motorcycles that we acquired. So they were being used for food delivery in different parts of Mexico, and we're hoping to pilot the same in Uganda very soon. So why Uganda is actually very compelling for EVs is because we have the cheapest electricity in all of East Africa. So because the Nile River begins in Uganda, there are multiple hydropower dams that have been built, and Uganda is a net a producer and exporter of electricity. So we produce so much electricity that we're able to sell the excess to Kenya, Sudan, Rwanda, Tanzania, and Congo. In the long term, EVs are absolutely the only sustainable solution that can work for the planet. I think one unfortunate thing is that the developing countries of the world are not the ones who have mostly contributed to climate change. That has mostly been Western countries. However, they still feel the pains of it, right? So at this point, the burden is on everyone really to find ways of coping with the changing environment. So in Uganda, before the end of this year, we'll start piloting electric motorcycles there as well, and it's a very compelling technology which saves money for the driver. Because the electric vehicles, they don't have moving parts, and they don't require things like oil changes or servicing the same way that a fuel motorcycle would. Of course, the cash price of an electric bike is higher than that of a fuel bike, but because of the lower maintenance and operating costs, they end up saving money in the long run. And in Uganda, there's actually some very interesting use cases of electric bikes. There are significant populations that live on islands in Lake Victoria, and it's very hard to get access to fuel there, right? Because the fuel has to be brought by boats, and so for some of these remote communities who are especially susceptible to changing environments, sometimes solar power is the only thing that they can access, and so having EVs would help them to earn livelihoods as well as to contribute less to global warming.
Fantastic. Okay, so clear that you've matured some of your thinking around this already. I like that reference to the moving parts. I read the stats somewhere that said the average combustion automobile has got something like 18,000 moving parts, whereas the average EV is 300. So that's quite a significant quantum leap in the downturn as regards required maintenance and some such. So from a credit perspective, that's great,
for sure.
Which segues us into the credit process. Perhaps can you pull the curtain back just a little bit further on some of your credit scoring process, and maybe relate that to how banks would ordinarily do this business, not on the KYC side necessarily, but on the credit scoring process, and how you have this advantage with your technology that you've built. I think users would like just to hear a little bit more about that before we go into expression of interest forms.
Yeah, for sure. So when we credit score drivers, we're trying to answer two questions. One is that does this driver have the ability to pay the loan, and we can observe this through their app data, like how many trips they're doing per week and per month. And then secondly, does this driver have the willingness to pay the loan? Because somebody can have money, but they choose not to pay back the lender for whatever reason. So the second question is a lot harder to answer because it involves character and personality. So we have developed automated and streamlined ways of credit scoring drivers. However, that's not the entirety of the puzzle. What we have learned over time is that how you treat the driver after he receives the vehicle is equally, if not more important than the underwriting and credit scoring, which happens prior to disbursement. So, we are working with very thin file customers. For example, in Uganda, there are border drivers who they might not have a formal ID document before they come to Asaak, and so one of the services that we provide is that we actually obtain a driver's license for them, and so they're able to get a government issued ID for the first time through Asaak, so that then they can qualify for our KYC processes. What we have learned is that by using carrots and sticks, the carrots being motivating factors, like if you pay the motorcycle loan well, then you can also get a school fees loan, or you can get a savings account, or you can get a smartphone loan. These are some of the incentives that actually make clients repay, more so than the credit scoring, which is done by the lender upfront prior to disbursing the bike, because there simply is not so much data available about these clients. So it's more about how you treat them after they're in your system.
Fantastic. Wow. All right, Kaivan, listen, this is an unbelievable opportunity, and you've done extremely well, both in providing us with an expose of your business tonight. I did notice there was a little bit of lag on the line, so well done also for keeping your cool and taking us through this in a nice and seamless way. Blake, thank you for making light of the heavy lifting on the instrument side. Ladies and gents, if you are interested in participating in this opportunity, again, a QR code which will flash on screen. There we go. Hover a smart device over it, and this will take you into the procedural infrastructure to help with investor certification, KYC, and get you into this opportunity swiftly. True to Asaak's nature, and you can hear from their DNA that they're tech-orientated and streamlining of standard operating procedures. You will find the same thing through this investment process. So please scan on this QR code, which is different from the first QR code that kicks off the expression of interest process. For those individuals that have joined late, I'll ask our production team in the background just to quickly also bring up the original two-way talk QR code. There we go. And that QR code gets you into this WhatsApp group that we'll keep open for the next 10 to 14 days to be able to answer questions directly by Kaivan and also by the SimpleCapital representatives facilitating this deal. Gents, thank you very much for joining me tonight, and to the audience for sitting patiently through this very exciting opportunity. Blake, I know that you've got some family members that you're about to go take care of. And Kaivan, if I've got the time zone right, your day has only just kicked off now. So you must be in the thick of things, making deals and getting ready to go to Mexico. So, gentlemen, thank you for joining me this evening. It's been a pleasure talking with you. One last time, we've got the QR code on to start your process of expression of interest. We hope that you would scan it. And Kaivan, all of the very best from all of us in the investment community with this mission that you're on. May you do so in prosperity.
Awesome. Thank you so much, Willem, Blake, and the SimpleCapital team for having me on. It's been a pleasure.
Thank you very much.
Thanks, Kaivan.
Good night, everyone.
Thanks, everyone.